Welcome to this web series, The Frugal Mindset, also known as Money and the Responsible Christian. This is the fourth segment of our Frugal Mindset Financial Skills section of the webinar, but this is our 14th segment overall, and in this one we're going to talk about the personal cash flow statement. As I said in the last episode, there are essentially two documents that are critical for us to get a handle and get an understanding of our personal financial situation. The first is a balance sheet, and a balance sheet gives us a clear indication of our financial picture on a certain date and time. And the other critical document is a personal cash flow statement. And a personal cash flow statement just tracks all the money you have coming in and all the money you have going out, generally on a monthly basis, but you can track it weekly, monthly, annually, quarterly, however often as you want, and however often makes sense for your personal situation. Let me talk for just a second about the difference between a cash flow statement and a P&L. The cash flow statement focuses on when cash hits and leaves the bank and answers the question, can I meet my bills today? That's opposed to a P&L or profit and loss statement, which looks at more of a long-term situation and answers whether you're building wealth or becoming poor over time. In the business context, whether the business is making money or losing money. For our purposes, I'm not going to make a big distinction between a cash flow statement and a P&L statement. We'll just talk about a cash flow statement, but we're using it for both. We want to get a handle both on whether we have money to pay our bills and also as to whether we're making progress or falling further behind as time goes on. In the last segment, I talked about the concept of de minimis, and de minimis just means a particular income or expense is small enough that it really doesn't change the needle at all, and so it really doesn't need to be counted. In the context of creating your personal cash flow statement, especially if you're having some financial trouble, then I don't really like you calling something de minimis and not keeping track of an expense. Now, one thing you can do if you want to track every time you buy a pack of gum is you could give yourself a small budget, which we'll call your funny money, your personal funny money for a given week or month. And it's got to be a small enough amount that it isn't going to significantly change the needle. So if you're earning $3,000 or $4,000 a month, it certainly is not unreasonable to give yourself $50 or $100 a month as funny money that you're not going to track beyond, you're going to use it for miscellaneous expenses, maybe go out to lunch a couple times, buy a pop, buy a candy bar, that kind of stuff. Now, as I said, a cash flow statement just tracks all the money you have coming in and all the money you have going out on a periodic basis, generally on a monthly basis. So what are the kinds of cash that you have coming in? Well, obviously you have income, you have potentially dividends, you have gifts. Any kind of money that you have coming in to you or your family needs to be included in your inflows of cash. And then what kind of outflows are there? Well, obviously, all the expenses of daily life. Anytime money goes out of your account or out of your pocket, it needs to be included as an outflow. And as I said, you can potentially give yourself a modest allowance on a monthly basis that you don't have to track every penny, but it needs to be modest so that it's not making a significant difference in the bigger picture. All right, let's look at cash flow statements for some of the folks we discussed earlier. Let's start with Single Jim. Before we go to the cash flow statement, let's remind ourselves how Single Jim was doing by looking at his personal balance sheet. Remember, Single Jim owned a home. He had $57,000 equity in the home. He had a pickup truck that he owned free and clear. He had an IRA with about $24,000 in it, and he had a couple of Visa debts that he owed for a total net worth of just over $101,000. Now let's look at the cash flow statement. So this is Single Jim's cash flow statement for January. You can see we've listed here, the date, then the item broken down into inflows or money in and outflows, money out. And then of course we list them in rows, money in. I've used green here, and money out I've used red, but you can use whatever colors you want. So income, Jim had $2,400. He makes twice a month, so he's got a total income of $4,800 a month. Pretty good income. Plus he had a stock dividend that month of $253.26. And then let's look at outflows. Let's look at the money went out in January. He didn't spend a lot of money on groceries, $76, $130, $120 grocery shopping. Then we'll move it up. Housing, his house payment is $1,400 a month. He's got electric, gas, garbage, property taxes. Then he's got TJ Maxx. He bought some clothing, spent a fair amount of money on some clothing at TJ Maxx. Then he's got his transportation expense, gas, he needed a muffler, auto insurance. Then he went to the dentist, had health insurance. Then entertainment, he went to Stumpy's for dinner. He went to Chick-fil-A. Then he got coffee at Starbucks one day. And then he gives 10% of his gross to church, so he's given $240 twice. He also has an expense for life insurance of $126 and $75 for phone service. So his total inflows are just over $5,000, but his total outflows are $5,120. So he has a net outflow in the month of January of $67. And we'll talk about those a little bit more later. As I mentioned in the introduction to this segment, there is a difference between a cash flow statement and a P&L, at least in a more formal accounting setting. But for our purposes, we're going to run the two concepts together. I think it's just simpler. And to do that, we do have to take our quarterly, annual, semi-annual bills and convert them into whatever monthly expense that is. So here we look at a form called Conversion to Monthly Expenses, and this is single Jim's. And you can see in January he had a life insurance bill that he had to pay that was $380, but it's a quarterly bill. He pays that 4 times a year. So we have to take that and divide it by 3 so that it has a monthly expense of $126. Now here he pays his auto insurance twice a year. The total amount each time is $620, but we have to convert that to a monthly expense by dividing it by 6. It's $103. And then a yearly bill, he only pays property taxes once a year, and his property taxes are $4,700. To divide that to a monthly expense, it's $391. So that's how you get the number to plug in monthly, even if he didn't write the check that month. So like I say, we're kind of running a P&L and cash flow statement together. All right, let's go on to Single Mary now. If you remember, a quick review of Single Mary's situation, she just really has one asset and one debt, and she has a total net worth of just $6,600. All right, now let's look at Single Mary's cash flow statement. You can see this is Single Mary for the month of January. Again, we have the money in, the inflows, income, other inflow. She had wages of $1,100 twice that month, so a total of $2,200 a month. And then she got a $100 gift from her mother, so that's a total of $2,300. We'll see at the bottom in a minute. And then the outflows, so we do them by category: groceries, housing, clothing, transportation. You can see her expenses there. Her only clothing expense was $35 at a garage sale. Let's go down to the bottom so we can see the rest of it. All right, there you see she had to buy gas, auto insurance, health insurance, dinner at Chick-fil-A, and then she's also a tither. She gives $110, 10% of her gross. And so her total inflow was $2,300. Her total outflow was $1,500. So she had a positive net cash flow that month of $718. So that's Single Mary. All right, now let's go to Allison and Andy again, and let's again review their balance sheet real quickly. And you can see, if you remember, they owned a house, and they're upside down in their 4Runner, and they have a positive net worth of $43,000. So that's kind of the balance sheet for Allison and Andy. Now let's go ahead to their cash flow statement. All right, this is Allison and Andy's cash flow statement. If you remember, Allison, when I gave you some additional facts, Allison is currently making $2,100 every 2 weeks, and Andy is on disability making $3,000 a month. But Allison, when she retires, and they're both at retirement age, when she retires, she will only be making $1,100 a month. But currently, the inflows are $2,100, $3,000, and $2,100. And then they spend about $350 in groceries. They spend a lot of money on housing, almost, $2,700 in housing. And apparently Allison is quite the clothes horse. She spent close to $600 shopping, and she did buy one shirt for Andy. Transportation, if you remember, they were upside down, unfortunately, on that 4Runner, and their monthly payment on that is $526. Health insurance. The health insurance is something you're going to have to keep paying for, or maybe when she goes on Social Security, then that'll be cut way down. Andy's prescriptions, and he is on Social Security, and Andy had a procedure where he had to pay a deductible and copay, $475. And Allison has been buying a fair amount of Starbucks coffee, $105 in the month of January. She has lunch. She's had lunch out a bunch of days, about $12 each, $250. They've had dinner out. They've had dinner at a fancy restaurant. They've eaten dinner a lot out. So they have, $400, $500, $700, $800 in January in eating out. They've only given $100 to church. And then they're making their minimum payments on Visa, $100 and $54. And then their phone is $123 a month. And she's been contributing $100 to her IRA. So the total inflow is $7,200. Total outflow is $6,900. But the net is $269. And of course, when their financial situation changes shortly, they're in serious trouble. And we'll talk more about that in the next episode. That's Allison and Andy. In our last episode, we talked about a personal balance sheet. In this episode, we discussed a personal cash flow statement. In our next episode, we're going to talk about how to use these two documents to create a financial plan that will work for you. Thanks for listening.